Afternoon, YouTubers. Welcome back to another episode of Jack of All Trades. I'm here again with Kaylin as always, and Brendan is still missing in action in Florida somewhere. He's probably drunk on a beach, that bastard.
Yeah.
So I think we should we got a short. I think we're gonna try to keep this episode short, but we want to talk about some really important stuff. And like the topic of the minute right now is GME AMC.
Yeah.
So I think
Yeah.
I know you've got some comments about that. So why don't we go with that?
I do. Okay, since this is what everybody's talking about, let's take a look at this here. So obviously you guys, well, I shouldn't say obviously, but you guys probably all saw, the beginning of the year when GME was the big hot thing and, ran like crazy. We pull that one up here. It's on the daily. So this is what started the whole thing, right? You guys remember, I think we talked about this on a podcast back in January or whatever, had this big crazy run and everybody thought it was going to go to $1 million a share or whatever. Came back down, and that's just kind of been fluttering along doing this for so long. So in this time frame, for whatever reason, there's been a shift from GMC to AMC. So when GME originally ran, it pulled up AMC, it pulled up KOSS, it pulled up EXPR. Like those are all what we call the sympathy plays. So normally you have you have this main runner in these type of setups, and just so everybody knows, this is a common setup. So this isn't like a once in a lifetime, it's a crazy thing that's never going to happen again. Like you have the coronavirus stocks, like we had the Ebola stocks, we had the Bitcoin stocks back in 2017. What else have we had? We've had the weed stocks. Like every single one of those have done this. They've all done the same thing. So first off, this is not a once in a lifetime thing. This does happen, not frequently, but it happens like fairly regularly enough that you can trade it and you can learn from it. So now that's out of the way. This is GME. That's what started it all. And then now we go over to AMC. So if you look at AMC here, this is the daily. So this was in January when it ran the first time. So AMC had no news. There was no relevance to anything that was going on. It just got pulled up by GME because it was a sympathy play. It's a similar stock. A couple of people talked about it. They think, maybe it's going to do the same thing, and people pile into it. That's what a sympathy stock is. Like a Bitcoin stock, for example, like a sympathy to Bitcoin at the time in 2017 would be anything that's Bitcoin related. So like Bitcoin itself is going through the roof. So, a company like GBTC or something like that, or RIOT, MARA, like all those ones that are Bitcoin related, they just start getting pulled up with it. So those are the sympathy plays. That's what we call, sympathy plays, or this, the kind of sidebar stocks compared to the main runner. So that's what AMC was back in January. And then we fast forward to now. For whatever reason, everybody on Twitter has been obsessed with AMC, right? They're thinking, it's going to be the next GME. It's going to go, I think I see the hashtag AMC 100,000 or something like that trending on Twitter.
500K.
Or 500K, whatever it is. Yeah, so everybody thinks it's going to go to the moon. There's all this data out now. I don't follow any of that stuff, first off. So I'm not sitting here saying it's not going to go to 100,000. I mean, it probably won't, but I'm not here to predict the future. I'm just here to kind of talk about what I've seen over the years. So this guy here, basically what happened is, it was a pretty bullish setup on the daily overall. So if you just look at it technically, I mean, you can draw quite a few triangles in here, right? Like, I mean, you can draw one there, right? Kind of sort of went sideways when it broke out of that, and then it ripped up. You can draw one. Where's a good one here? Like if you draw one from right here, like you can get another kind of triangle going like that, and then you get the breakout, the pullback, and then it rips higher. So like the technicals on this are pretty bullish. So like anytime I'm looking at something like this, I'm just looking at it as a trade. Like everybody that started piling into this on Twitter and stuff, like they were buying it like way back here. Like they were buying into these pops and thinking, it's going to go to $1 million right now, and then this whole way along, they're just on this big roller coaster of through hell, and they're loading in, and they're way down money, and then they're up, and then they're down, and it's just this big emotional nightmare. So for me, as like an actual trader, I'm looking for something like this. I'm looking for a pattern that I can see, where it's going to break out and then it's going to pull back. Like look at this. If you put a horizontal line right there, so we had this big high volume top, went right into this $12 area. Touch right there, say 11.93. Again, we had a top into it there, it broke over, and then it topped into it here, came along, topped into it again, and then finally when it broke right out, it came down, it sat right on that line perfectly, and then it it took off, right? So it's a really nice, clean technical play. Like it's a beautiful breakout setup that like I would have bought if it wasn't so much other crap going on in this thing. So yeah,
Now
I
that
just
you,
want.
you mentioned that, I just wanted to say the period from like January, like end of January until call it middle of March, that almost looks like a cup and handle, right? Because you
Well,
got the
like
big cup,
here.
you got the little handle, like before that. So the beginning of the cup will start from like late January.
Yeah.
Yeah. So you got that cup, then you got the handle, then you got the little breakout, and then the
Yeah.
breakouts where it's sold off, and then little consolidation, and then start breaking out again. It's actually
Yeah.
really technical.
I know, that's what I mean. Like that's the thing. It's like that's the thing to look at when you're looking at these plays is they're all technical plays, right? So like something like this it's it's a tradable stock. It's not like again, AMC is not an investment. Like the company's bankrupt, they're probably not going to be around for many more years. That's kind of the reality. So it's not an investment. Like you're not going to hold this thing for 10 years and 20 years and sell it at your retirement unless, they completely change their business model, start doing something different. That's a whole other story. But as an actual movie theater, the company is basically garbage. Like it's useless. It's not going to make any money. But as far as like a tradable stock, which is, I'm a trader, this is what I look for. Technically, there's a lot of stuff to play in here, right? Like there's a lot of long sides. On the daily, I don't really see any short setups that I would like. I don't really go long very often, so I didn't take any of this. But it is a good setup. So that's kind of some of the stuff to look for to just, make sense of this. And then again, you can see here the day that it did break out of this kind of little triangle range, look at the volume down there on that candle, right? So that's great confirmation, right? You get that breakout, huge volume, confirmation, comes into the pullback, holds there for a couple days. Like that's textbook, right? That's where you just load the boat and ride it up. So that all worked out really well. The thing about this stock that's kind of interesting is, again, first I haven't been following all the news because I really don't care. Like I just look at whatever trades present itself day to day. I don't want to bet all my money on this thing going to $500 a share because that's not what I do. Basically, the consensus that I'm getting is that everybody who's in this stock, or at least like a huge percentage of them, are people that are brand new traders. They're not very educated in what's going on, and there seems to be all these like streaming services, I guess, that are going on, like on YouTube and Twitter. There's all these people that have just kind of come out of the woodworks that are considering themselves experts, and they're basically streaming all day long, just talking about AMC and like just giving all this data. Like it's kind of become like this huge cult thing where there's so many people on board. Excuse me. There's so many people on board now that what they're trying to do is squeeze this stock. So it's got, as of a few days ago, it was roughly like 20% of the float was short. There's a bunch of hedge funds that are short this stock. So they're trying to do the same thing they did on GME, right? Like they're trying to basically push the stock high enough, force the hedge funds to cover, and then as they cover, they have to buy. So they have to buy the stock up to get out of their position so they don't lose all their money, right? That's what a short squeeze is. So that's what they're trying to do here. Now, a couple of key differences between this and GME. I don't remember exactly, but I believe GME was, I think, 40 or 50 million float. AMC is close to 500 million float, right? So it's significantly more shares, significantly more stock you have to move. So it takes a lot more buying pressure to squeeze something like AMC versus GME. GME also, I believe it was over 40% short float. So it was almost double the short float of AMC. So like on paper, AMC is probably 20 times harder to do what we did to GMC essentially, or GME essentially, just because the numbers are so much higher. So that's kind of what everybody's trying to do. Now there's the options side of this as well, where everybody's saying they're going to have a gamma squeeze, and there's all these options that are expiring and blah 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 blah. I'm not going to get into that because I frankly don't know very much at all about options. That's not what I do. So whether that's true or not, I don't know. I can't comment on that. But as far as the actual chart here, so I just want to go through how I would look at this if this was a typical stock. Like let's just say this was, your standard 20 million, 30 million low float stock. It'd run up like this. We're looking for a short setup. Okay, what are we looking for? So we'll take all the other stuff aside, and then we'll just look at what this thing's doing. So let's go to say the 30-minute or 15-minute candles here, just so we can get a better idea of what it's done. So basically it started, when was this, May 24th. So, we had the first day, it kind of popped up, went sideways, and then you get these couple days where it kind of runs up sideways like this, You get the sell off, right? So usually what happens on something like this, you get a small gap down. This spike here was, I bet you that was caused by a bunch of people piling on short. So they shorted the open like crazy because they're thinking, okay, it's run up, from $12 to $20. Now it's gapping down $3, $2, whatever. So let's pile on short like it's over, right? So they all get in short and then everybody buys, so they get squeezed, right? That's what happens here. This is your first short squeeze. It's in this move right there. And then it consolidates for a bit, everybody, then you get the FOMO buyers coming in, fear of missing out, they just rip this thing even higher. So you get this big, parabolic move, and then, this is when you're getting into your big volatility here. So I'll pull this back to a shorter time frame. I like the 3-minute candles. I think it's just the best amount of information. So again, out of the open here, like look at that consolidation off the open. So right here, like this is just a big fight essentially between shorts and longs. And these candles here, your 1830s at the low, 1920s at the high, and we had basically 15 minutes of pretty decent volume where this thing is just wicking up and down, up and down. Like this is just a fight. Like this is longs fighting shorts. That's all that is. And then right here, this is when the longs win. So you get this big candle, the next big candle, and then this one right here, this giant volume bar. That's all the stops in the short. So all the shorts are covering out. They're panicking. You get this quick pullback. Everybody else is buying, and that's when you get the squeeze. That's what that is. So for anybody that doesn't really know how to read candles, it's a really, really helpful skill. I personally find the 3-minute, even the 5-minute candles kind of give you the best amount of information. Like the 1-minute candles are choppy. They're kind of messy. They're a little bit harder to read, but this is a really good indicator that there's basically just a fight going on. So this is the kind of area that you don't want to trade because it's just too choppy. You got to wait until it picks a direction before you start trading it. So that's what happens. We got the direction, we start heading upwards. And then basically from there on, it's just strong all day. It goes up. You get this big afternoon run up here, big parabolic, big tank. So this is a really good short opportunity on the short term right here. Check the volume on that candle, right? Big volume candle, like 12 and a half, like 13 million.
See, I don't short, but that I would even if I did, I wouldn't have the balls to short that one.
No,
Just because the price action, like bidding it up, look at that. It's going up with increasing volume. Like that's like you couldn't get more bullish than that. I'd be so scared to short,
those are
to
great,
short that
man.
one.
That's the best. Those are the best ones to short. Like as soon as that gets, they call it, like a lot of guys I know, they call it the exhaustion move. So like you're just going up, the volume's getting higher and higher and higher, and then it just gets so high, and the candles are getting so big, like it just can't keep up, and then you get that big smack. So like the safe spot to short this would be after this, call it a death candle, like the biggest volume bar of the day, and it's just a big fat red candle. You short that bounce and just catch that next move. Like that's the easy money right there.
Yeah, the bounce is confirmation.
Yeah, like trying to grab this top is really, really tough, and you can get blown out really. Like look at like we're moving from here from 27 up to almost $30 in like what 6 minutes, right? So you can hurt yourself pretty quick on those. So it's always take the easy money, guys. Wait till something confirms and then pile in, right? Like if you want to try and pick the top, use like 10 or 20% of whatever you're going to use. Throw the other 80% down here when it's safe, because then at least you have something to risk off, right? But anyway, so yeah, so we basically.
I wonder. Actually, sorry, I just want to say something. Like, I wonder. Like, this is May, right?
Yeah.
So I'm wondering if in June, no, June's the end of. So I wonder if like when Q22's earnings comes out, a couple of hedge funds are going to go ahead and say like they were in there and they went long, because I know of some of them are probably into fucking over the other guys. So because they're all sharks, right?
Yeah, that's true.
If you're like if you know the GME guys are giving you a base of support, and you see some guys kind of like sticking their necks out trying to short this thing, like, oh, I got a few bucks, let's go.
Wouldn't surprise me, man. Well, like we just looked at the technicals, like it was a really good long setup,
Yeah,
right?
yeah, yeah.
So
So
it wouldn't
whoever was
surprise me.
fighting like knew what they were doing.
Oh yeah, for sure. But that's the thing is like again, like we have this beautiful setup, but then behind the scenes we just have all these brand new traders who are just like brainwashed by all this social media and Twitter stuff going on that like it's anybody's guess. That's why like if you're gonna trade these, like trade the easy moves, like the one I just showed you there. Like that's the easy move, right? That's where you're low stress, you don't have to worry about anything. If you're just gonna short this thing and ride it for a few days, or buy it long and then it goes $10 against you, like that's a headache, man. I need that stress.
Yeah. Yeah, this is one of those things where you want to get in, make your money, and get out, and just sit and wait for it to calm down, and then jump back in. Like
Yeah,
riding that thing is like could
I
ruin your
know.
life.
That's the tricky thing, right? Like if you're going long on these things, like again, I'm not a long trader, so like I know like there's 100% guys out there who can probably ride this thing right to the top because they know what to look for. But as a short trader, you know, it's so much easier just to sit here and just watch the thing go to $100 a share, do whatever it's gonna do, just sit back, relax, wait, and then all of a sudden when you see it break, then it's like, okay, now we're going back down to $5. And that's when you can pile in comfortably and just like let that thing go down to zero basically. Like I've seen like that's the thing too on these stocks like this, like you know, again, like I've been this has been the kind of stuff I've been watching forever. So we'll just look at this daily. I'll talk about this day we had on Friday in a minute, but like I've seen stocks like this. There was one even they don't happen too often, but there was one I think it was like just over a year ago. I can't remember the ticker, but it went from like $3 or $4 up to I think 25 over a period of like 3 or 4 days. And then it gapped way up to like close to 30, and then it closed that day, I think at like $6. So
Oh,
like yeah, like sometimes when these things finally crack, like they crack real hard and they fall like free fall. So that's the move that you want to wait for on the short side. Is like once that snap happens, you just like throw your whole account at it if you know what you're doing and just ride that thing down to zero basically. Because then you know how far it has to fall, right? If you're on the long side, like for me as a short trader, I don't know how far it's going to go, but I know how far it can fall.
if only there was a way we could combine our abilities because I like catching knives and you like shorting, so we're technically two sides of the same move.
Yeah. Well, see, I've thought about that in the past. Like I've thought about that. I'm like, okay, well, like I'm getting pretty good at covering. Like I can usually cover like pretty close to dead bottom or like at least at some areas where it bounces and stuff like that, and I'll kind of get some good covers. But like sometimes I'll cover at the areas that I'm looking for, and then it bounces all the way back up, and I hit it perfectly. Other times I cover at the areas I'm looking for, and it just rips down another like 20%. So I'm like, eh, I don't know if I'm really ready to start like covering and buying all in one
Yeah,
chunk. Trying to take the other side of it, but
yeah.
maybe one day.
But it's not twice as hard. It gets like exponentially harder. It's like
Yeah, because then you got to be able to flip your thesis right away. Like it's
yeah,
tricky. I'm not that good yet.
really confusing.
Yeah. All right. So yeah, let's take a look at this chart again here.
You are
Um,
still on AMC?
yeah, I'm still on AMC here. I just kind of want to walk through the couple days just to give you an idea of like like
Oh no, I
again.
was just gonna say when at the very end, don't close it yet. If you can go on the weekly when you're done, I want to show you something I just found.
Okay.
Yeah.
Okay. Yeah. So here, this is that day again. We had the big tank, and then like right near the close here, we had another big another big candle down, and it's not surprising, but it just kind of shows like how much buying pressure there is behind this. When you get like a big tank like that at the end of the day, and then it comes all the way back up to highs, you get another big tank, and then it just goes sideways, and then it gaps up the next day, and it starts going higher. Like that's huge buying pressure right there for that to be able to do that. And then so pre-market, this is Friday now, so this is the big day that we've had so far, right? So we gapped up a little bit, kind of cruised up pre-market. Around 6 a.m., we had this big spike up to what, $33 right on the nose. Kind of sold off, and then where's our open here? Started to come back up. And then like check out these candles, man. Like look at this 930 candle. 20 million shares traded in 3 minutes. And look at this wick, dude. Like look at that. 32.45 up to almost $37, wicked right back down. Like, let's see what this looks like on the 1 minute. I haven't even looked at it yet. Yeah, like check out those candles. This is on the 1 minute. So this is the 930. This is 930 right here. You get 1 minute where it just kind of flutters around, and then you just get this huge green candle, big spike, and then right down. So in 1 minute, like in a 1 minute candle, it went from almost $37 down to $32.50.
While
Like,
we're talking about movies, the visual representation of this is like Saving Private Ryan or like any of those war movies where everyone's just shooting at each other. You don't know where the bullets are coming from. That's what that is.
yeah, this is thousands of people at their keyboards just absolutely screaming and panicking. That's what that looks like in a candle.
Yeah, the dollars of the bullets. It's like just flying in either direction.
Yeah, yeah. But so this is what happens though, right? Like this is what I like to call not me, a lot of people call this a stuff candle, right? So this is why I like the 3 minute. like you look at the top, like you look at that top wick, that is so much selling pressure. It's insane. Like you have this little tiny, this little tiny filled candle right here and this giant wick up the top. So basically what this is, and like I've learned how to read these on the 3 minute candles, and this is why I like them, because again, you can't really see that as well in the 1 minute. This is everybody buying up, and then just getting absolutely smashed down with sells, short sells, people selling their long positions. Like that is a ton of selling pressure right there on that candle. So after you see something like this, like again, I wasn't playing this because it's just I don't like playing something like this. It's I'll show you what I like to do after this, but something like this, that's when you can go short. Like you can start shorting into these pops, like really small size, maybe 20% of your size, because we're over VWAP. Longs are still in control, but then you can risk over this high, because like when you've had a candle like that that's gotten smacked down so hard, that now everybody's looking at this going, okay, that's a lot of selling pressure. Let's start shorting pops. Like that's what that tells you. So you can see here these next two candles, like they got within about 10 cents of that top, and then we had another big sell off, right? Like even this move right here, like if you put a couple orders, like let's say you put a bid at 34, 35, 36, just sized in small on that, and then you short into VWAP and short at the low a day down here at $31, like you have a 35 average, you cover down to $32, $31, like you can make a quick $3 a share in 5 minutes, 5-6 minutes on a move like that. Like so
That's like a 20% move within minutes. Like you can make
yeah,
a lot of
and
money.
like that's the safe move, right? Like you put your things, you put your shorts in here, do a hard stop just above the high of day. So if it pops up, you can say, okay, let's say I want to risk $100 on this, however many shares that is, and I don't know, maybe it's like 20 shares each entry or whatever. You do 20 at 34, 20 at 35, 20 at 36, and then you just cover down into these lows. You can make a quick 150 or some odd bucks or whatever that works out to be, right, in 10 minutes. So those are the kind of moves that are a little bit safer on plays like this. But again, like when you're playing the head of the snake kind of thing that's leading the whole pack, they are a lot riskier. So what happened after that? Basically, again, I'm just kind of walking you guys through like the mental side of this, like what people are looking for. So if you look at this candle here, this is kind of the flip side of that open candle. So the open candle, we had this huge wick that indicates massive selling pressure. And then we tank below the VWAP line. For those of you who don't really know what VWAP is, like tons of traders use it. It's basically, just think of it as an indication of who's in control. If you're below VWAP, shorts are in control. If you're above it, longs are in control. So here, we get this big tank below VWAP. We're at new lows from the open, and then we get a huge bottom wick. So that's a ton of buying pressure again, right? So now we're right back to yesterday where we have this big fight going on between longs and shorts, right? And that's what you see right here. So you have that almost the exact same thing, right? Like we got these big moves off the open, and then we're back to battle again. So you got these candles, we're just moving sideways, big wicks. You have this one here. Look, it tries to sell below VWAP again, gets bought right back up super fast, right? And then you get another indecision candle right here. And then this one right here is a pretty good indication of, it's another stuff candle. It's a similar one to the open, only it's on the red candle. So like for, what is this, 9:48 to 10 o'clock. So for 12 minutes, we're holding under like, 34.50, call it, right? So for 12 minutes, we can't get over 34.50 with trading, 7-8 million shares every 3 minutes. So there's tons of volume here. Can't get over 34.50. On this candle, we get a big push up to 35.50 and it gets stuffed down. And if you look at the bottom, again, super important volume, right? So we get a bigger volume bar right here. So that's a stuff candle again. So that's a stuff from the top. So that's your selling pressure once again. So at this point, we kind of have, it's tough to see, right? We got buying pressure on the bottom. We got two big candles of buying pressure. We got a huge candle of selling pressure, and then we got one more candle of selling pressure. So, what do, right? Well, just keep waiting, right? Keep waiting for some good confirmation. So then all of a sudden we start getting tighter to the VWAP, we close down, and then you get this big fat candle right there that closes below VWAP, closes strong. There's no big wick, there's no buying pressure. Okay, like this is where, you want to get in short. This is where it's safe. The buying pressure is not coming back in anymore. So what you can do is basically short in this range under VWAP, and like if it was me, I would probably risk like just over 33.50 kind of thing. Like look at the range on this thing, give it 50 cents. Just basically put your stop just over VWAP, And then, you can pile in here short on these pops, cover into the washes, and like, you're 32.50, what, 1, 2, 3, 4, five or $6 a share to the downside there in, 15 minutes, risking say $1, right? So that's your 5 to 1 right there, right? Get in here on this pop, you risk $1, you make $5. Like that's good risk to reward, right? That's what we're looking for on these things. So again, it's just looking for the move, right? We're not trying to hit a home run on this thing. And then, we kind of go along. It's again, this is why I'm kind of not sure what it's going to do, because there's a lot of things on this one that should have happened that didn't happen. Like if it was like a really big panic day. So like right here, we had, 3150 kind of became the level, right? It was the line when we tanked below VWAP. You draw that line in here, right where it closed there, like 3160 area. So that was kind of, our level when we dropped. So now we bounce back up, and we're kind of just sitting right below that area for quite a while, right? And we're coming up, like I'm not a huge fan of horizontal trend lines. I'm just doing this for visual,
I
but
love them.
I hate them. I just think that they're too, like, there's too much interpretation. Like, you could draw a line like that. You could, I don't know, somebody else could, I don't even know. I don't want to get into them right now.
No, you're right. That's where the art is. It's really easy to look at a chart, be like, oh, there's a bunch of diagonals, and you'd be right, but you wouldn't know what to do with any of them. It's knowing which ones matter.
Yeah, exactly. So this one I thought was pretty clear, so I'll put that on there. But yeah, so we're basically, we're just kind of coming along this line here, and we can't really get over this 3160s area. And then, we fall out below this horizontal trend line, and that's when we just kind of get this nice steady sell off for the next hour or so, right? So this dotted line down here, now, on these types of plays, so, a lot of people call them first red days, right? You get all these run ups, we're gapping up. So the first day that the stock actually like trades down out of the open and it goes red on the day, so it goes below this line, that's usually a big signal that, everything's kind of flipped around. Like, sellers are in control, longs are getting out of their positions. Like that's a huge indicator on a lot of these types of moves is first red day. And these are easily the most profitable setups. Cause like I said, I mean, I've seen these first red day setups go from $30 down to $5 in a day. Like it happens, right? When you get that big waterfall. So on this one, there's a couple things that kind of make it a little bit different. So first off, we're up towards $37 at the high. Now we're down to $27. Keep in mind, this whole move on the way up was about 250%. So we've basically given back, 100% on the long side. We've given back 100% of the move already, essentially, right? If you're coming from this top all the way down. So for this, at this point, a lot of people could have made a lot of money already on the short side here. A lot of longs are probably already out. Maybe they're even looking to dip buy at this point because it is still so high. So normally when this breaks, like right when this line breaks there, you can absolutely just pile on short. And like, that's when you just get like the huge bleed down to nothing, right? Like that's such a key level. You can even look here, like on this one here, like the green candle bounced like almost to the penny off of that line. Like it's absolutely a massive level to keep an eye on for these kind of multi-day runners. So the reason I think that this didn't go down is because we were already, $10 off the high on, a stock that was $36. So we're already pretty far down. Like if this clothesline from yesterday, if it was like $32, say, and we had this big spike and we were $4 down from the high, and then let's say this 3160 line was the red green line. If we broke that, I bet you this thing would have sold right off to probably like $20 because it's a lot tighter, right? And then when everybody gets under that, it panics. But because we've already had so much sell off, I don't think it induced quite as much panic as it usually does. And then, again, right here, you go back to this kind of battle. So like, that's the way that most like traders trade this stock, right? Is they pile in this line. So if everybody's piling in here, and then look, again, we get a big bottom wick. So there's still so much buying pressure. And then you get this big short squeeze right back over. Like that's what this bar is. That's all the shorts getting their stops hit because everybody's putting their stops just over the previous high, just over red to green, right? Then it comes back over, gets under again, and then I bet you everybody piles back in again. And then all of a sudden you get another little short squeeze back over the line. Like they're small moves, but that's what these are. These are short squeezes. Because as soon as you get under that red green line on these multi-day runners, that's when everybody piles in short, because that's a huge indication that that the trend has changed. That's your main indicator, right? So the fact that towards the end of the day we just kind of literally just went up and down and up and down over this line is, it just begs the question, what's going to happen next week. So, again, I don't like horizontal lines, but if you did want to draw like some sort of a triangle, like, I don't know, you could do something like that. And, we're not really selling off after hours. We're just kind of going sideways, right? So I think, it's a long weekend in the States right now, Memorial Day. So I think Tuesday is going to be pretty interesting. So like for me as a trader, I couldn't tell you what this thing's going to do. Like it could open at $30 on Tuesday and it could rip up to $50. It could gap down to $20 and it could sell off to $5, right? There's no way to tell what it does. The bottom line is, if you guys are gonna trade this and be involved in this, know how to read the candles, be super careful because this is a dangerous stock to trade, and just take the moves. Don't look for home runs. If you've been in it since $10, you're already up quite a bit. That's great. Okay, maybe you can be a little bit more relaxed with the moves on it. But if you're just trading it, just be super careful. Like, don't rush into these things. That kind of brings me to my next point. I just want to touch on this really quick, David, and then you can get to your stuff. So all the side plays. So KOSS, this is one of the side plays, right? So check this out. So similar sort of setup, right, as AMC there, because it follows it. So
low.
Yeah. So the thing about these side plays, or these sympathy plays, is generally you have your main stock runs up, and then your side stocks run up a little bit less, but then they sell off more. So like, let's just say AMC goes up 100%, KOSS might go up, I don't know, 60%, but then if AMC sells off 20%, KOSS might sell off 30 or 40%, right? Because it's this weird kind of thing that goes in between them, where like the side stocks, they get pulled up not quite as hard, but then once they let go, when the main stock breaks, they fall even faster. So they're less volatile, there's less people trading them, so they're a lot easier executions. And if you're going short side, they sell off a lot quicker. EXPR is another one. So if you check this one out, this was actually really good. Same thing, we had a similar kind of morning. And then when AMC broke, right here around 20 after 10, you just get this sell off. And then if you notice this, AMC, how it kind of went sideways at the end of the day and kept trading up and down over that red green line. EXPR went down, it went sideways below it, and then it sold off way, you went from 470 down to 420 again. So this one sold off even farther. So this is kind of what I'm talking about, right? It's following AMC, similar kind of moves. As soon as AMC breaks, you can get into something like this, and it's a lot safer, because even if AMC reclaims a little bit, this thing's going to reclaim slower, or it might even just go sideways, or it might just keep selling off. So the side stocks are a lot easier to play on the short side than the main ones. I just kind of wanted to point that out. So anybody who's like kind of new to trading, or trying to figure out what to do, my recommendation is don't trade the one that everybody's talking about, because it's honestly just way too difficult. Like it's just going to be too hard. You're going to lose all your money. Just, if you're going to trade them, practice on the side ones. They're just a lot easier, and they sell off a lot harder, so you can probably make a lot more money on them, to be honest. So, well, one more thing I wanted to bring up that I thought was interesting just about AMC. So again, like GME was like a 50 million float. AMC is 500 million float. The thing I thought was weird, I looked at the order flow on Friday, and a couple of people kind of mentioned this on Twitter too. So it was trading a ton of shares, but the way the order flow was coming in, it didn't seem like it should have been moving a stock like that to that degree. So like we saw in the 1 minute candles, we're moving like $5 a share in 1 minute. But if you're actually looking at the time and sales when that was happening, it was the same kind of like the order flow is like the amount of orders coming in. So if you look at the level one, it'll say 1,000 shares bought, 1,000 shares, 200 shares, 200. Like it shows you every single order that's coming through in real time. So when I was watching that, I'm looking at it and I'm like this is like, it's not a lot of orders for this kind of float, and like the stock, the stock's going nuts. So I'm like, that's kind of weird. And then my phone goes off. One of the other guys I follow on Twitter said the same thing. He's like, does anybody think this thing's trading really thin for the amount it's moving? And I'm like, yeah, it is. So for anybody that doesn't know what that means, like trading thin basically means it's not trading very much volume for the amount that it's moving. So if you had like, say you had like a 10 million float stock, which normally these types of moves happen on, you have 1,000 shares kind of coming through in orders and buys and sells really quick. It's going to be moving a lot because like 1,000 shares is a pretty big percentage of the overall float of the stock, right? So it has the power to move it. But if you have a 500 million float stock and you're having that same order flow coming through, 1,000 shares, 1,000 shares, 200 shares, whatever, and it's moving it just as erratically or even more erratically, it's kind of weird. So, like, my take on that is basically that I think so much of the float is locked up in just people that are long that the actual tradable float has got to be somewhere around, like, I don't know, maybe 20, 30, 40 million. Because I honestly think that like 300 or 400 million shares are just locked up by all these Reddit guys and hedge funds that are just not doing anything with their position. So the actual float that's transferring, yeah, they're just sitting there holding on to everything, just waiting. So the actual float that's trading is only this tiny little percentage, which is really strange. I've never seen it before. So like that's why I'm just really excited to watch it next week because honestly, I think whichever way it goes, it's gonna be quite the move. Like if it goes up, and I don't know if the shorts will get squeezed that hard if there's enough of them, or like if most of it's longs, which I kind of think it is. If it breaks to the downside and all those Reddit guys do get scared and start selling, like I mean, I think it could go down to $1. I don't know. I've never seen this before.
Just had a funny thought. You remember 300? It's the famous Battle of Thermopylae. Like the
Yeah.
reason 300 Spartans was able to take on however many tens of thousands of Persians was because they were fighting in a funnel, basically. I think this is what's happening with this stock, right? You got most of the float that's illiquid, and then so it actually makes it a fair fight. It doesn't matter how much money Wall Street has. If you only have a certain amount of shares to trade, that's it. It's not a
Mhm.
money, right?
Yeah, I
Just
think
had a
that's
funny
what it's done. It's really weird. I've never seen
yeah.
this before. I'm looking
So,
for it. I'm taking a lot of notes because
so
I want to know how to capitalize on this next time.
I got to give a kudos to Wall Street Bets. They're pulling through. They are actually diamond hands. One, it's working, and two, it's actually equalizing the battle a little bit against the short sellers. I'm impressed.
Did you see? I think it was Kramer said on his show on Friday or something like that. He talked about Beyond Meat, saying that Wall Street Bets should go after them next because they have such a high short float, and he started talking about that a little bit. I think it went up like 10 or 13% or something.
Wow,
You see that? So yeah, so even Jim Cramer's saying like, "Oh, I think they should get after this one next." Like it's becoming this whole thing, man. It's crazy.
it's just really interesting to watch play out. Like I honestly didn't think they would last this long. They've already proven me wrong, and they're actually a real force in the market right now,
Hmm.
right?
That's pretty cool. I wonder if it's gonna like go on forever, or if it's gonna be like eventually gonna kind of get like dismantled. Like they'll have like too many picks, and there won't be enough in one, or whether the SEC is gonna kind of crack down on them a bit. I don't know.
I was listening to somebody say it was just something really simple. He was just like, what happens when like all the lockdowns and everything's fully reopened and people aren't sitting at home anymore? How many are going to stick around to do the trading, assuming they even have the resources? And then how many people are just going to like go on to their normal lives now? This
Yeah,
was fun. It was a nice chapter, but it's over.
yeah, yeah. It's. I'm just loving watching it play out, man. This is really cool.
Just trying to get my presentation going. Sorry, Sam. Do you know?
Do I have to stop mine or?
Yeah, I think you might have to stop yours.
Oh man. All right.
But
How do this? Oh no, I think I'm
bottom
paused.
bottom right.
Click to cancel your presentation.
Yeah.
Okay, there we go. Not very tech savvy.
No, I'm
Just,
not.
I just downloaded DOS Trader Pro, and I've just like watched an hour of how to set that thing up. I was, oh my god, gotta
But it's
figure out.
completely different.
Yeah, it's like a different, like DOS Trader is basically it's like a platform to trade through. So like you can link your brokers to it. So I gotta have like all my my 3 or 4 different brokers all linked through DOS Trader, and then when I trade, I just use a little drop down menu. I can just hit whatever broker I want to do the trade on, and then funnel it through that one system. But I'm trying, like it's what all like most of the pro guys use because it gets the best order flow. It's like the most customizable. Like the everything's just like it just gives you the most options. But I gotta figure out how the hell to use the thing.
It's time. You're going Super Saiyan 3 now.
Yeah.
Sam, can you pull up my screen, please? I'm gonna make some bold calls.
Okay, I gotta see this.
If I love my wedges. So we're back from the technical difficulties. This is what I wanted to show Kaylin earlier. So there's a couple things that I love that most people hate, which is one, diagonal lines and wedges or triangles. And I'm just looking at, and while Kaylin was talking, I was looking on the weekly, and I've seen, like, we both agree we saw some bullish formations, but I'm specifically I've trained my eyes to always look out for these rising wedges because they are a doozy. A lot of people don't see them coming, and generally what it means is that this is buying power, buying momentum, just kind of like losing steam. So so the price action is heading towards an apex. And what usually happens is about a third of the way up is when the momentum loses steam, and you'll see a break. And then, so what are we looking at here? 50. I think it's going to happen around $56 to $60 area. Yeah, $56 to $60 area. And I think that coincides really well with something around this side. So like new all-time high. So basically, I think AMC is going to hit new all-time highs, and then just sell off real quick. So that's an area to watch out for, the high 50s. And then, yeah, so the high 50s. And usually when it comes down, it'll come down in spurts too. So it'll come down, they hit previous highs, see if it's support. Then it usually goes back up about 60% on the fib, and then it'll come back down again if it's still bearish, and then it'll test this previous area. And the reason I say this with conviction is because I've studied like hundreds and hundreds of charts on different timelines, and I've seen this pattern over and over again. That's why I can pick it out so easily now. But yeah, so if it's bearish, this is the play how it'll play out. If it's bullish, it will continue on here. So this area above 20, I'd say 26 bucks. Now I even say like 38 to $60. That area is key to watch. And if you look at it, the RSI is already kind of getting tapped out there.
Yeah, I'm gonna ask you about that. Like, what do you? Because you read RSI a lot more than I do. What do you think of that?
That's normal. That's not bullish or bearish. It's normal.
Okay.
Because there's no divergence. Yeah, it looks perfectly normal. It's what happens next that's going to be really interesting. Because
Right.
what I think is going to happen is the price is going to make a new high, but RSI is going to make a low, and then you're going to have a divergence issue, and then that divergence is going to be confirmed by this break, and then that's what's going to send it down.
Okay. That'll
So
be interesting to
yeah,
see. Yeah,
I'm
because
gonna.
whenever you use that on the small cap stuff, it usually doesn't go that long. You just get that one run and then it just dies. Right.
Right.
So, but because
Yeah.
this
So
this has such a high float and there's so many people watching it, then maybe it does this.
yeah. So
Interesting.
I'm gonna keep this going and then see if it
Yeah.
plays out this way. We'll check back in like a few weeks.
Yeah. See if it actually plays out. That'd be cool.
But but yeah, I don't have that much this week. I just want to show, like, I actually hit a few orders this week. So this is my Binance. So like I was telling Kayla, I think offline earlier, that I was like, I'm doing better trading now that I'm not doing longer time frames. Like I'm actually so busy that instead of looking at the hourly candles, I'm looking at the daily and the weekly. And I just look on the charts once a day to kind of catch up on what's going on in the market. But I set a few orders. I saw the Bitcoin was coming down, and then what I saw. Can I draw with this? No, I can't draw with this platform. That's okay. So I saw Bitcoin was coming down, and what I ended up doing was here we go. Never mind. There we go. Love my diagonals. You see that? So we were back on the 24th to 25th. I saw this kind of forming, and we were losing steam. I actually called that Bitcoin was going to turn around at 42.5. We turned around way before that. So I was like, fuck, it's looking really bearish. So then that's what this sell off here was. But then I drew the diagonal. I thought, okay, this might be a buy zone. But instead of buying Bitcoin, I calculated how much it would affect the trading pair of ADA, and ended up putting the same percentage drop, but only in ADA. And I put in these orders for $1.38. And so where's it at now? You know, I can't remember how to use this platform. All right. So I set the orders for ADA, I think USDT trading pair. There we go. So it's like a buck. I think you can see my orders from here. Yeah. So you can see. Yeah. So I set orders for $1.30, 38, $1.38.33, and it bounced like right off. So my order is right about here. It bounced right off this. I think it was like 50-day or whatever it is. So now it's up.
So you expecting a big move back up then, or what's your profit target?
Yeah, so my profit target's actually here. I want to see if it's going to get rejected by these wicks here.
Okay.
So I've got a couple sell orders just kind of layered between this areas here. What is that? Between a buck, yeah, a buck 90 and a buck 96 area. I think that's where I put it.
Hmm.
So it's weird when I log into Binance with this platform. It's different than logging in on the web because I should be able to get the trading view look here. Oh, here we go, trading view. Because the cool thing with trading view is that it'll show my orders. There you go. So yeah, it's some buy orders layered for like from way back, and then yeah, so that's my exit there, buck 95.33.
Okay.
That's my exit. So I think that was like a quick. That's going to be end up being a quick 40 something percent swing.
Nice.
Ideally. Um, but since I'm so busy now, I'm actually going to try to figure out how to set a stop because I don't, but I think now I'm going to.
Yeah. Yeah. Stops will save your life.
Yeah, because I'm in the money now, so it's kind of stupid not to. I just got to figure out how to do it with this platform. Because Binance is weird. Trading spot has a different configuration than trading futures, so then it's a little. Got to get used to it. I'm not used to trading spot. It's been a while.
Can you attach a stop loss like to your order, like so it cancels the other ones too, or no? They have
I
to be
don't
like an
know.
individual.
I got a stop limit here, but it looks funky to me. Like it doesn't say because if you're doing futures, not only can you do stop limit, but it'll say reduce only. So there's no chance of it you going short or like whatever. It just only reduce your position or it won't activate, which is the
Um,
safest. Because I've had it before where I didn't have that reduce only, and what it ended up doing was put me in a short position instead of selling my longs. It put me in a short position. I was like, fuck. So I've gotten burned like that before.
yeah,
But yeah,
yeah.
so that's my so I did two trades this week, my ADA trade and then my Galaxy trade. So Galaxy was pull that up. Oh man, Galaxy is my MVP.
I was gonna say you're killing it on that thing, man.
That I don't know what I'm just like in sync with that thing. I'm just like stupid lucky with it this year. Galaxy Digital, sorry, there it is. Yeah. Because I've been playing that. Oh yeah, look at this stuff. Look at my diagonals.
So many lines.
This is how I traded. This is if everybody's
Oh,
wants to know,
yeah.
like this is how I traded that shit. So but yeah, so I ended up catching the knife right here too. I love catching knives. It was I picked it up for 1850. So like just a few, maybe a quarter and a change below where it ultimately hit.
Yeah.
I remember I sold all time high and I just didn't want to touch it anymore because Bitcoin looked tapped out, everybody looked tapped out, so I was just sitting in cash. And then once it had two straight days in this wick, I was like, usually when I see this wick, I'm like, there's gonna be another day coming down.
Hmm.
So then I looked on the VPVR and I was like 1825 looks like it's going to be strong support. So I went up a little bit, went to 1851 because I figure I'm going to front run some whole number of people. And then I
Yeah.
put my order in there. So it did a nice little bounce. And then I actually put my exit right here too. I had two orders. I exited one of them. So I'm about 50% out. And the
Okay.
and the exit was about 23.90 something. So just below 24 bucks. Again, I'm trying to front run. And
Okay.
that it was like 23.95, I think was the max for the day. Let's
Yeah.
see, 20, no, it did 24.04 was the high. Yeah, 24.04 was the high for the day. I exited, so I exited like 7 cents below the high.
So you're getting that just
But
off the volume profile? Is how you pick that level?
the exit,
Yeah. No, the buy-in.
the buy, yeah, the buy, I looked at the VPVR
Uh,
almost exclusively. I find that it's more accurate than looking at the candles. You can get the exact same information, but I just find it cleaner just to look over to the right side and be like, okay, so I should tell you. So after I spent some time with this thing, I've actually figured out how I like to use it now. When I want to place a buy order, these gaps are really great for that because they almost act like magnets for buy orders. So when I want to go long, so I'll place my orders within these gaps. But when I want to when I'm feeling bearish, when I want to catch a knife, I find that these spike areas, these are going to be strong areas of support. So if it's going to bounce from somewhere, it's going to be here. And if it doesn't bounce from here, it's got a long way down to go. So those are like the dangerous knife catching things. But that's what I found. So if I want it like, so if the market was bullish, what I find was that the price will usually front run these support areas. So these gaps are perfect. And then if the market is bearish, I use these spikes
like
as
on a
support.
pullback, you mean? You'll get in where there's no volume, and on a big drop, you'll get in where there's a volume spike.
I'm sorry.
Sorry, so, like, explain that again. Like,
Okay, so let's say I want to go long. I have to first figure out where the market is. So if the market is bullish, let's say it was 3 months ago, the market was still bullish, then I
Yeah.
wouldn't place the orders at these spiked areas because it wouldn't reach them. I find they would only reach these gaps because I think people are front running. So these gaps, what they represent is areas with very little price
Oh,
action, with no
okay.
volume.
So yeah, so if the whole trend is bullish, then you'll buy into where there's the gaps. But if the trend is bearish and you're trying to dip by it and just hit a
Yeah.
bounce bar, there's the spikes. Okay, okay.
Yeah, exactly. So it's really important to kind of get a gauge on where the market is because there's a couple times where I try to buy during these spikes during the bull market and I missed and I was like, how? And then I figured out I'm like, okay, it's front running, it's whatever it is, it's causing people to get to buy in before that.
That actually makes a lot of sense because I use volume profile when I'm shorting, and whenever I'm shorting, I always find the areas that are really heavy is like the same thing. Like I'm going like day to day, but wherever there's the biggest volume profile spike, that's usually a huge area where I'll start to get short. So it's the
Yeah.
exact same thing only in reverse, right?
Yeah, exactly. Exactly.
Like,
So
the whole chart's bearish, but it's I'm hitting a spike up into that level. So
yeah,
that makes sense.
exactly. Exactly.
That's hilarious. It's like a totally different play, totally different. We're both doing the same thing. We don't even realize it.
So I think this is like a really important thing to tell people is like you be using the exact same tools and for like different purposes or getting a different piece of information or use out of it.
Yeah, I just had to get you to explain that to me because I didn't understand it the first time, and I'm already doing it only in reverse.
Yeah, and I think that's what's the key about like people that because I still get messages from guys that people that want to get into trading and I'm like you've said it a lot of times you got to get your hands dirty, you got to get in there. And like this is one of those things you really have to just test these tools out and then find how it works for you because we just took the same thing, we found it and we applied it to us but in different ways and it works.
Yeah, yeah. That's kind of the funky thing about trading is like so many of the things are the same. Like I've heard it so many times. Like everyone's like technical analysis is easy. Like everybody's looking at the same stuff. It's just a matter of like, what's your risk tolerance and what's your time frame and how much stress can you handle and like, what charts are you playing and what floats are you playing? Like it's just like there's so many areas, but like just the broad scheme of technical analysis is like you can pick it up pretty quick. Like it's not hard. It's just
Oh yeah,
actually like implementing it and making the right trades off of it are that's the hard part.
that's the trial and error, get burned a few times.
Yeah, yeah,
Yeah,
yeah.
yeah. Like what was I going to say? I was going to say like oh, I forgot. Did you want to hear about my Vimeo because that was my new long-term
Yeah, yeah,
play.
I was gonna ask you about that.
Yeah, Sam.
You
So
look at it long term, right?
it was super hard trying to find the data on this company. I mean, they just went. I think I don't think they IPO. They went public. Maybe it was a direct listing or something. But they got spun off by their parent company, who apparently does this. They bought a whole bunch of companies and they've spun off like 10 already. So this is their thing.
Okay.
But it's just like a $6 billion company right now. And the only reason I'm in it is because I'm a customer. I've been a customer for almost 8 years now, 7 8 years, paying like a paying customer. And so like this is one of those things for investing where Warren Buffett, Lynch, they always say like you should stay within your circle of competence. And it's like because I'm a customer, I have a little bit of a deeper understanding of this company or their product or their use. And so like they're a very small company, only $6 billion valuation. And but what they do is they provide backend services for anybody that wants to provide video content. So the wanting to go an alternative route from YouTube. So YouTube is like ad based. Vimeo is only subscription based. So they show no ads. And if you want to put your content on there, you're free to do so, but you got to pay like a monthly fee depending on what functions you want.
Mhm.
But the reason I'm in it is for the same reason I was in Tesla, and it's the same reason I'm in Nvidia is because I see the future being bright for this industry. Maybe not necessarily for this company, but for this industry. I think COVID did something where it showed people the importance of having not only an online presence, but an online media presence, video. And I think a lot of gym owners, you might even know this better than me, but a lot of gym or coaches have survived doing online courses, right?
Yeah.
Live stuff, whatever it is. And so this would be perfect for them. If you, because I think a lot of people got shocked when COVID happened, they realized that if I don't see my customer in person, I don't see my customer,
Mhm.
right? And so like they need to have an online presence. And then this, it not only gives them an online presence, but it gives them a way to make some money. So for instance, like if you wanted to coach and you created a series of videos, you load it onto Vimeo, you could create a paywall and you say $5 a month, $20 a month, whatever it is you charge it, Vimeo take a percentage on their back end. and you could take their platform and put it on your website. No branding, no nothing. It just looks like, just like your video on your website. And so it's really professional way to really get started to like sell your own products, right? People can do live stream. You could do, for like, let's say you wanted to do some trading seminar, you could run it here too. You could create a dollar paywall, a subscription, or like a one-time fee, whatever it is, and you could just run your live stream and you can talk, and there's tips, there's a whole bunch of stuff.
Okay.
And so it's like kind of like the next level of Shopify. If you want to open up a website, you want to start selling stuff, go to Shopify. But then now if you want to add video content and have a way to sell it, then this, or monetize it, this is the way to do it.
Yeah, that makes a lot of sense, especially now. Like so many people are doing like stuff on their own, like on the side and things like that. That's a great way to make a business.
Yeah, yeah. Like, and the great thing about them is like they don't trap you in like a certain set price. You set your price, they'll take their cut, right? I mean, obviously there's a minimum. You can't sell to me 50 cents, but Kevin Levroni and Chris Cormier, they sold their videos on here. That's also one of the reasons I know them.
Oh, okay. They've been around for
Yeah.
a long. They've been around like as long as YouTube.
Yeah, yeah,
They've been around. I think I remember seeing them in like in high school almost. I want to say.
yeah. They've always been number two, but like a distant number two.
Yeah, yeah. Because I remember seeing stuff where it's like, yeah, you can watch this on Vimeo, and then I couldn't watch it because I had to pay for it or something. And I was like, oh, screw this thing.
Yeah, I think it took them a while to figure out where their position was because there's no way they could compete against YouTube.
Yeah, it seemed like from the sounds of what you just said, like I didn't know anything about them until you just told me, but that sounds like they're just premature. Like I can definitely see a market for that now, but 10 years ago, that seems like it was like nobody would have been really involved in that.
And honestly, I think 10 years ago, they didn't know what they were doing. Like okay, we have a platform, you load our videos. We don't have ads because we don't want to be like YouTube, but we have no idea how to monetize it. They just kind of like sat in limbo for a little bit. And
Yeah,
what I noticed over the years was that their technology got better. Like the video they have, like the software they have for the video to upload and all that stuff. It's really well thought out, really well developed. And so it's like I've been plugging it into my websites. It automatically resizes like whatever features you want. They could do it. So it's like it's really good. My only thing is like I don't know how big the market's going to be. But because they're only like $6 billion, they're basically a fruit fly these days. I figured like if all goes well, they get to be a 10 bagger. So why not? I think I put like $3,000 down for it.
yeah, yeah. I
But
mean, like I can definitely see a market for it, though. Yeah, it's hard to tell how big it would be, but I mean, like the way social media is now, like so many people make a living off of like Instagram and YouTube and all that kind of stuff. So I don't see why it wouldn't be. It's a similar kind of thing, but set up as a different platform. Like subscription stuff does really well, right? Like a lot of people, like a lot of like trainers and stuff, like bodybuilding trainers, like a lot of them have websites too, where they do the same thing. It's like $5 a month, and they just upload videos and content on their website all the time. Like a lot of people do that. So
yeah, yeah, exactly. And like I feel like these days, I know Sam doesn't want to talk about it, but like because he has experience running a YouTube channel and doing the monetization and stuff like that, and it's like YouTube really they're really like the dictators, and they could at any moment make a rule that just destroys like a whole section people's revenues, and that's what happened to Sam. And so so I think a lot of people might start looking at the alternatives pretty soon.
yeah,
But
yeah, that makes
um but
sense.
but what's funny though, I don't know if we could pull up the chart real quick, but just to end this, but remember I was asking you the other day if you could look at the chart for me because I don't usually look at charts companies that just IPO'd or just went public.
Yeah, neither do I.
And so I was trying to figure out an entry. Like this is on the hourly, and I was trying to figure out an entry. And I remember it was so this purple line. That's when I was asking you because I was like, that's all I could do. I mean, I don't. I mean, let's look at it on the 15 minutes. It's really not that much data.
Yeah. So where'd you end up getting in?
I bought in at $42, I think,
Okay.
and I
Yeah,
can't remember
so
how I
hard, man.
reached that number.
IPOs are just a whole other beast.
Yeah, I can't remember how I reached that number, but clearly I was underwater. I think Thursday, but it doesn't really matter. I mean, there's no price action. Like, what does it even mean if you're underwater at this point, right?
Yeah. That's what I mean.
But
Like IPOs are like they're so tough because there's no history.
yeah, so yeah, it's a little early, but so this is my thesis. It's like always use a couple of orders. Like now I'm starting to do the same with my swing trades, where it's like I got my kind of FOMO order. I put it somewhere reasonable where it's very likely to hit, and then I'll have my kind of value order, and then I'll have my low ball order. So
Yeah.
we'll see what happens.
That's the
So
best
I
way to do
realized,
it. Then you get that little piece in there just so you can be like, okay, I'm in. All right, we're good. Now I can think a little clearer.
That is exactly it, because I can't do the FOMO thing. I'm like, if I just get a little piece of it, I can't say I'm not taking part. I can kind of breathe.
Yeah, exactly.
Yeah. All right, brother. I think you're good for this week.
Yeah, I think we're good. I think we covered some decent
Perfect.
stuff.
Yeah. Remember, everybody, we're still trying to work on the clubhouse thing because all three of us are so busy. It's hard for us to even get together for the convo. Um, but if you have any questions, send it in the comments or just DM one of us because you guys ask me personally. Just ask me on the show or something. We can cover it. All right. All right. Take care, guys.
See you later, guys.